Hey traders, Jason here from Levitt Brothers. Happy New Year. Let's talk about the state of the market. What's going on? Indexes, breadth, some key stocks, some key groups. I'm not going to do a summary 2025, but let's get an idea of what's going on right now, the current state of things, and maybe look forward into 2026 and see if we could figure out maybe what is likely to play out. All right, first let's get into the indexes. All right, so here's the S&P 500 daily chart going back to last March. You can see big flush in April, big move off the low, steady climb. Overall doing well, but reality is over the last 4 months or so, it's mostly been in consolidation mode. Okay, we had a high here, a lower low here, higher high here. But all the data points fit nicely within this box going back a couple months. I consider it to be like a consolidation pattern within an uptrend, but it's kind of neutralizing. The indicators are flattening out in the middle of the range, not in the upper part of the range. But I don't have a strong bias given the state of things right now. When you go to higher high, lower high, higher high, no ability to follow through, some quick flushes in there, some quick rallies in there. There's a lot of inconsistency. I don't see it. Nothing jumps out as being obviously bullish or bearish. It's just a market that's kind of chopping around trying to figure out what it wants to do. Backing up, here is the weekly chart going back like five years or so. Obviously doing very well. The index likes to trend up. Get support from its 21, get support from its 21 there. We had one touch there. So the S&P could actually fall a couple hundred points and still be considered in a long-term uptrend. But you don't really know what's going to happen because, we had a consolidation pattern here, which resolved up, and then we had a consolidation pattern here, which resolved down. So right now we have a consolidation pattern within an uptrend. Everything is looking good on the long-term standpoint. And we just don't know what's going to happen. Like it could fall back and touch the 21, which is right over here. It's a couple hundred points below. We can continue moving sideways for a couple more months. We could break out to the upside. We can break out to the downside. I don't have a strong bias right here. Overall, it's doing really, really well. But from a trading standpoint, there's nothing here that tells me I need to hurry up and get in. The NASDAQ is similar, but it's more volatile. It's more herky-jerky. You can see, drop below the 21, same thing here, same thing there. There's a lot more drops below the 21. It's a lot less smooth. Most notable is the fact that when the S&P moved to a new all-time high, the NASDAQ did not. Okay, so we had a new high here, a lower low there, and then an inability to match the S&P and go up to a new high. Overall, I consider this to be very neutral. You can see all moving averages have flattened out in the middle of the range, and the range being something, like there. Like all data points going back like 4 months or so are contained within this box. Moving averages about, flattening out in the middle of the range, slightly above the midpoint. I consider it very neutral and just simply no strong bias at this point. Backing up, weekly chart, 5 years, same type of thing. I think this just kind of solidifies the fact that it's neutral. I don't know what happens here. We got a touch on the 21 there. Maybe we just consolidate here for a couple more months. I don't know. Maybe we come down and test the 21. I don't think there's a strong bias. Overall, obviously the market is doing incredibly well. But it was doing incredibly well here and then fell. It was doing incredibly well, not incredibly well, but it was doing very well here and broke out to the upside. It was doing incredibly well here and topped. It's doing incredibly well here, and maybe it falls, maybe it goes, maybe it breaks out. We don't know. So I think at this point, given what I'm talking about, given what I'm going to show you in the next handful of slides, I think it's best to be a little bit more conservative here because I don't think there's a strong bias. Okay, maybe you can say overall the market leans up because after all the trend here is up, but I don't think it could be like a strong bias where you're going all in. All right, let's look at some indicators. This is the 10-day the 10-day, 20-day, and 50-day of the NYSE AD line, all of them are back to zero or very close to it. Okay, so like if price is here, that 10 days ago is somewhere over there, 20 days ago is somewhere over here, and 50 days ago is somewhere over here. And basically the S&P is flat over all those time frames, and the AD line over those look back periods is also near zero, is also flat. So it looks like the market moved up and has basically been flat long enough that all these internal readings have fallen back to zero, and the market's essentially flat going back a couple months. And so the market can take a big deep breath here and just kind of start over. There's no strong bias here. Here's the cumulative AD line, which is like the real AD line. And, same thing. It's like going back to September, it's basically unchanged. There was, lower low there, lower low there, higher high there, higher, but mostly flat, maybe in the upper part of its range. Doesn't really matter, but it's mostly flat to match this being mostly flat. So consolidation mode within an uptrend, no strong bias. Here's the all stocks 1 month high low, S&P 500 higher high, 1 month high low, lower high, consolidate. So that's negative divergence somewhat induced this little bit of pullback in the last week or so. It's not a big deal. It doesn't scream, a little negative divergence just means we're going to get a little bit of softness. It happens. I don't think I have a strong bias right here. Like, this is salvageable. The market could easily right itself. Lower levels are down here if you're looking for a flush. Consistent, uptrends have consistent prints above zero with a little move down occasionally. We don't really have either. We don't have a flush here, and we don't have consistent prints up here. We just have some movement in the middle, which matches the fact that this has been non-committal for several months and not much is going on. Here's Russell 3000 stocks above the 20-day moving average. Higher high here, lower high here. Negative divergence somewhat induces this. But same thing. It's like we got lows here, 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 which match up with that low, that low, that low. So we don't have a complete flush yet. We just have a negative divergence that induced some soft, some near-term weakness, and now the market's just got to figure the stuff out. Other negative divergences have done the same. We had negative divergence here, and then we had, some weakness there. We had negative divergence through here, and then we had some flat trading here, and now we have negative divergence again. And, so far we have just some flat trading. So maybe the market just bounces around. Maybe it tries to go up, tries to go down, and maybe a week or two later, it'll be unchanged again. Just the negative divergence caps the upside. It's not going to let it go anywhere. At least it's not going to let it go far or really hard. So at this point in time, I think the market is just kind of resetting itself, and it's got to show its cards before we really get aggressive from a trading standpoint. All right, here is the Russell 3000 stocks above the 50-day moving average. Similar divergence, higher high here, lower high there. That's in place. I would say the bigger concern here is the fact that there was an inability to print a higher number there. Okay, when times are good, you get these prints in your 80 as the trend matures. You got a trend here which is really gaining steam, and you get prints near 80%. As the rally matures, you get less prints, less stocks following along. And I would say the biggest concern here is we had all-time high here, and we had it's very obvious that the participation rate has dropped off. So it's a bigger concern. If this thing's going to rally up, we're going to want to see this rally up, 70%, 80% to get up there in the high 70% range to confirm like an uptrend. But if we go up here and this print over here just kind of hovers around 60%, I question the ability of this thing to go very high. All right, now let's talk about some stocks and groups. Everyone says just pay attention to the leadership stocks. They're going to lead the way. They're going to tell you what's going on. But I don't know what the leadership stocks are. Are they the large cap stocks? Are they the up and coming, data center stocks, like what actually are we supposed to key in? And I don't really understand the whole idea of like follow the leaders. Like, doesn't leadership, even within an uptrend, leadership changes. Like, so you can have money come out of some group and go into another group, and on the surface the S&P continues to trend up, but like there's rotation beneath the surface. So I don't know what that whole follow the leadership is, because leadership changes. So let's go through some groups here. From the mega caps, here's NVIDIA, obviously big move up off the April low, but it's been flat for since the end of July. Google's been a clear winner. Apple's been a pretty good winner too, because they never got into the whole data center space, and data center space is kind of sensitive right now. Like it can do great, and it can also pull back. Apple's got to deal more with tariffs and import type stuff, but overall it's done well. Meta has been a disaster. Tesla did well until the end, until last week. Amazon did, Amazon looks more like Amazon and Microsoft are like flat over the course of several months. So there's a mixed picture among the mega caps. Some doing well, some doing pretty poorly. There's definitely not a ton of leadership in this group. So let's look at some groups that did extremely well last year and just see kind of what the state is. So here, data center stocks, obviously really big winners last year. Nebius, huge winner, but then crashed. APLD, huge winner, came down hard, got cut in half. Cipher, giant winner, came down hard. IREN, giant winner, came down hard. So are data centers done? Like, are they gonna base and come back to life? Are we gonna play them again, or are they just off limits for the next 6 months or 12 months? I don't know. They, like, all of these were on the Lever Brothers trading list. They all gave us really good trades, but obviously most of them got cut in half or almost cut in half. And are they going to come back to life, or are they off limits? I don't know. Aerospace did well and seems to be a group that's going to continue to do well. Rocket Lab, big gains, big loss, but then it came back. ONDS, big loss, but now it's coming back. Broke out just at the end of last week there. ASTS, big move up, big move down, seems to be firming here in the middle of its range. Lunar just recently broke out of a multi-month base. Aerospace seems to be a place that hasn't completely died. It looks like we're going to be playing those going into next year. Drone stocks, Joby, huge winner, totally fell off. Archer, total disaster. Katos, huge winner, completely fell off, now basing, so maybe that's playable. Red Cat, choppy, huge winner, gave huge move down, now it's trying to come back. It's kind of a mixed picture here. It just kind of shows you that, like, you don't want to, I tell people, like, you want to date stocks, you don't want to marry them, because stocks, you don't want to have loyalty to them, you don't want to cling to them, you don't want to become like emotionally charged about them, like, play them and then dump them. Okay, so if you played Joby and made good money, then you turn around and gave and sat in a stock that went from 20 to 12, you don't want to do that. Okay, play it, put a stop in place, and when it stops acting well, kick it to the curb and move on to the next one. So I don't know if the drone group is going to be playable next year. It's got to prove something to me. The nuclear power and the power names have done really poorly. BE, huge move up, coming down. Maybe Friday's move is a sign of things to come. Oklo, huge move up, huge move down. SMR, total disaster. NNE, total disaster. So these are, they were hot. You play them and then you dump them. So are these going to come back to life next year? I have no idea. Quantum names, huge move up for RGTI, huge move down. QUBT, big move up. And then it got more than cut in half. QBTS, big move up. Again, more than cut in half. IonQ, big move up, gets cut in half. So again, they're hot, play them, and then they cool off. So you got to just dump them and move on to something else, or go short if that's your thing. Point is, with all this, it's like we've had all these groups, whether it be aerospace or data centers or drones or power or quantum. They are hot stocks, hot groups, gave us big wins, but they've all fallen off big time. And the question is, going into next year, are we going to play them again, or are we going to be playing an entirely different group of names? Gold and silver, obviously really big winners. SLV, big winner. GLD, big winner. They match up with silver and gold. AGQ, leverage version of silver, posted a huge win. GDXU posted a big win, although much more volatile. They fell off into the end of the year. My guess is they eventually right themselves and we'll be playing them again. All the AGQ and GDXU have been on the Lever Brothers trading list. My guess is they continue to do well once they figure things out from the weakness like into the end of the year. But at least these were the leaders in December, while a lot of the other stocks were falling off. What's going to be hot next year? I don't know. Maybe retail. Okay. American Eagle was a Lever Brothers name. Second half of last year did really well. Abercrombie and Fitch double bottom, broke out to a higher high, so that's looking better. Lululemon's been a disaster for a long time, but it's come off a little bit of a base here and is now consolidating. Maybe that'll come back to life. Deckers was one of the best stocks in the S&P for many years, but it's gotten crushed, but it's coming off a low here and seems to be consolidating. Maybe that's going to come back to life. So, as we move into next year, maybe we're not playing data center stocks or quantum names, but we're playing some retail names. Commodities seem to be a place to play. Alcoa is a Lever Brothers name, still in this stock. For aluminum, Peabody Energy is a coal stock. The entire coal group is looking really good. Peabody looks really good here to break out. Kind of broke out from a little triangle pattern here and is now flagging. That one looks good. Industrial metals look good, whether it be steel and such. CCJ is another Lever Brothers name, broke out here, doing well. A lot of the uranium stocks, huge move up, big move down, basing now, but now it seems to be breaking out here, so that's another potential one. So as we move into next year, indexes are mostly in consolidation mode. The internals have pulled back off highs and suggest kind of a neutral state. And then, so overall, we're just kind of in consolidation mode and we're like very non-committal. The market's not it's not weak, but it's not strong, and there's no strong bias here. Among the groups, the biggest question is like, what are we going to be playing? Just what are we going to be playing? Are we going to be going back to the well and are data center stocks going to come back to life? Is crypto going to come back to life? Drones, nuclear power, quantum, robotics. Are they going to come back to life, or are we going to be playing an entirely different group of stocks? That's kind of the big question. Commodities seem to be in play right now. That's the most obvious group to play. That's a big one. But otherwise, we don't really know. If I was going to make predictions for 2026, I just wouldn't make any predictions. I can make a case for the market to run up here, have a blow off top, and then have like a legit midterm year bear market. I can make a case that the market is already topping and we're going to trend lower for several months, and then maybe when we get a new Fed chair and they aggressively lower rates, maybe that'll bring the market back to life. I don't know. There's a lot of legit scenarios, and I just don't think it's wise to put your foot down and say I think XYZ is going to happen, because to a greater degree than normal, I really just don't know what's going to happen this year. So I'll go week by week. I'll study the charts. Most of my best information comes from the movement of individual charts. If I look at 500 charts and the charts look pretty good as a whole, then I'm going to be moderately optimistic. If I look at 500 charts and the charts don't look that great, I just don't have that many good setups to play, then there's really nothing to do. So ultimately, I'm just going to look at the individual charts and just make just gauge it. Is the market in good shape, or is the market not in good shape? All right. Good luck. Good luck next week. Good luck next year. I'm here for you if you need anything. You can email me, get me on Twitter or X, and we'll see you.